Three stocks I'm buying now, December 2021 edition. Let me first start out by saying, I think it would have been easier if I made a video on the stocks I'm not buying this month, because needless to say, we're going to go over a whole lot more than just three stocks in this video. I'm going to give you guys the three stocks that are like automatics. These stocks are like, there's no question I'm going to be buying these throughout the month of December. But I'm also going to get into a lot of stocks that are like what I would call probably buys. So stocks I'm going to more than likely buy, especially if these stocks hit certain prices by certain dates. Obviously, a lot of these stocks are what I would call under $10 billion market caps. We do have a few that I'll feature here that are going to be over a $10 billion market cap, at least one. But most of these are kind of the small caps. That's where the real opportunity is in the market, in my opinion, right now. S&P 600 small caps trading around the cheapest they've traded in a decade for the most part, other than a very short amount of time in 2018. So that's where the real opportunity is in the market. So none of these stocks are going to be big tech. None of these stocks are going to be Apple, Microsoft, or any of those sorts of companies. Not that those are bad companies, it's just that's not where the real opportunity is over the next 3-5 years in this sort of market, with where valuations are at for some of these stocks. So yeah, I hope you guys enjoy this. As always, I always love doing these videos each and every month, and make sure you're subscribed to the channel. It's absolutely free to do so. You just got to hit that subscribe button. Everybody that needs to be subscribed to the channel, okay? Alrighty guys, so obviously, first one of these three stocks, and like I said, we're going to get into a whole lot more than just three stocks in this video. This is just one of the automatics. If you follow my content heavily, there's no question this one was going to be one of the stocks featured. Like, there's just, yeah, I would say there's two stocks, two of these three stocks, there's just no question. I think there might be some more surprises in the probablys, but for the two of these stocks, you already know these are going to be on the list. Tattooed Chef, anytime this falls in the 15 to 17 range, I'm a heavy buyer of the stock. As of today, it's trading at about $1.29 billion market capitalization for this one. Huge plant-based food player. Now, this is important. This came out a couple days ago. No one really paid attention to it. But essentially, Tattooed Chef announces new chief operating officer, COO. So basically, this gentleman got promoted to the COO position, and basically says, I'm very pleased to promote Jasper to Chief Operating Officer. During his time at Tattooed Chef, Jasper has proven to be a seasoned leader with deep understanding of our business and the inherent complexities of scaling and operating a high-growth business, said Sam Gleddy, President and CEO of Tattooed Chef. His expertise and experience will be invaluable to Tattooed Chef's growth going forward, and will allow Stephanie to focus on her role as CFO. And there was obviously there's an issue where they had to postpone the conference call, this latest conference call. They had to postpone it a few days, and a lot of people did not like that. Obviously, shareholders don't like when you have to postpone a conference call. So it's good to get Stephanie fully focused on being CFO. She was basically having to be the COO and the CFO recently, and it's a bit much, okay? Especially in this sort of growth company. I mean, Tattooed Chefs puts up crazy growth numbers, 43% plus revenue growth last quarter. When you're in that sort of company, it's tough to be the COO and the CFO. You can maybe do it if you're in some little super small company, but this is grown into a food giant. And yeah, it's just, that was a good move. I think it went on the DL, but I like that one. Okay, so in terms of Chef here, 43% plus revenue growth expected here in 21. As far as next year, 2022, 31.9% revenue growth expected. I would not be surprised at all if they beat that number, which this year they kind of disappointed as far as the growth goes. I think next year will be a reversal where all of a sudden they'll beat numbers, and we'll see what happens with that. Expected to take a loss next year, but look at how much the loss is expected to be down. So 62-cent loss expected this year, down to a 22-cent loss. When you're starting to get closer and closer to profitability as a growth company, that's a massive deal for you. And then the last kind of leap is when you can go from basically losing money to then start making money, right? And that's generally speaking when you see a massive kind of ramp up in the stock price as the losses get less and less, and then you go to that next level, which is profitability. And if you're still able to put up nice revenue growth, which Tattooed Chef's going to be able to grow revenues at a double-digit plus rate, in my opinion, for this entire decade, essentially, like all the way to 2030 plus, this company should be able to grow revenues year in and year out 10% plus. Some years I think will be 20, 30, maybe even over 30% growth. Some years might be more toward like a 10, 15% growth. So when it comes to Chef, I actually just posted this in the Discord chat right now in the private stock group. I said, need everybody's help to kind of take pictures of different Kroger stores out there, which owns Fry's and Smith's and Harris Teeter and many other popular stores. It seems like the rollout's been a little slow, at least from what I see here in Vegas. for the Kroger stores. So I think a lot of those numbers are going to end up hitting actually more in 22, even though the announcement has come here in 2021, here in the back half of the year. Over the past couple months, I think the numbers are really going to start hitting for 22. And it really gets no bigger in terms of a grocery store chain than Kroger. They are the biggest grocery store chain in the United States of America. And so, the products are getting in those stores. It's just been a little bit slow for the rollout. And so I think a lot of those numbers are going to hit next year, which is going to boost up numbers in a big, big way. Okay. Now, when it comes to Tattooed Chef, this is going to become a lot more than a frozen food company over the coming years, essentially. So just starting even next year, they're already talking about getting into refrigerated goods, and they're talking about getting into snack products and nutritional bars, meal replacement bars next year, okay, meaning 2022. So this is a huge, huge deal because the growth in the frozen food space for them is so, there's so much growth for them to be had. It's ridiculous, right? This year, 2021 was basically the year where they announced they're getting into basically every retailer you could possibly want to be in, right? Now, what next year represents is SKU expansion of basically their frozen food items. So meaning they get more and more products. So let's say they get in a store with 2 items or 4 items. Then all of a sudden they get 6 items, 8 items. Now, let me be very clear. Why am I so confident that they're going to get SKU expansion? Because they've been doing it. They've got into retailers and they get more and more items because they sell really well. If you look at Target, they started with Target with 2 or 4 items, 12, 18 months ago. And now in some of these Target stores, they have 20 plus items. So it's not like I'm just going out on a leap of faith and I'm like, I hope they're going to be able to get more SKUs in these stores. No, this is something they do and they do very, very successfully. Okay. And so here's something I look at and I'm like, the frozen food opportunity is insane for this company. Now they're talking about getting into refrigerated goods, snack items, meal replacement bars, nutritional bars, all those sorts of items. It's just, the opportunity in the chef is one that you don't get anywhere else in the food space, just flat out, okay? No, it's a plant-based food company. This is very important because sales are set to increase by 5-fold by 2030, essentially, all right? The global market for plant-based foods could see a 5-fold growth by 2030, helped by rising demand in sustainable products, according to Bloomberg Intelligence report. Sales of plant-based dairy and meat alternatives reached $29.4 billion in 2020 and could increase to $162 billion by 2030. The plant-based food space is going to take off like a rocket ship over the next few years. It already is taking off. It's just going to get bigger and bigger and bigger and bigger. And so the companies that are best suited, in my opinion, in the world to basically thrive in this sort of environment, and there's several companies that are going to be playing in this. And when you have this sort of growth industry, everybody wants to be part of it, right? But there's 4 core companies that are going to benefit more than any others and are just in the best position. Okay, one is Beyond Meat. Obviously, they just have some innovation problems there. They haven't been innovating nearly fast enough the past 12 to 18 months. But there's no doubt they're set to thrive in this. Impossible Foods, which could go public in 22 at some point, they're set to thrive in this market. Oatly is set to thrive in this market, and Tattooed Chef. These are the 4 horsemen, I call them. The 4 horsemen of the massive change that's going on with the plant-based food industry and this massive boom we're going to see over the next several decades. I think we're going through one of the most transformative time periods we've seen in the food industry ever, and certainly in the past 40 or 50 years. And so I'm looking at this as just an incredible opportunity that these companies are going to thrive. And I think Tattooed Chef of these companies, I think this is the most innovative company of this bunch. I watch all these companies. I pay attention to who's getting in what stores, the SKU expansion, how many products they're coming out with. Tattooed Chef just takes the cake over all 3 of these companies. And like I said, I track them all in a very heavy manner. And Tattooed Chef is innovating faster than any of them. They're keeping the pedal to the metal faster than any of them. A lot of these companies will make announcements, but man, it seems like they're so slow to actually come out with a new product in a space. They're trying to partner with companies, things like that, respect. It's just Tattooed Chef just gets it done. They're like, hey, we're doing this, and we're really doing this. We're like out now. All of a sudden, the products started hitting stores. They're announcing, oh, we're getting into Walmart, we're getting into Target, we're getting into Kroger, blah, blah, blah. It's just, they move at a pace that I've never seen at for a food company in my entire life of being in the stock market since 2008, 2009. Never, ever seen a food company move this fast. The next closest thing would be Oatly. This is the next closest thing to a company that's moving at this sort of rapid pace. After that would probably be Impossible, and lastly would be Beyond, okay? So, and by the way, even though Beyond is kind of the slow mover of the bunch, they still move way faster than most food companies, I can tell you that. It's just Tattooed Chef. They're the Usain Bolt of this category, okay? Now, So, as far as a team here, Sam Galletti leads this company. Full faith in him, full belief in him. Stephanie gets to just focus on her CFO role now. Matt's just, he's just an operating machine. He's just serious business, man. That man just, he's like, we're going to get into every retailer and we're going to get 100 products in every one of these retailers. And then Sarah is just kind of the superhero of the bunch, where she just continues to innovate at a rapid scale for this company. And just, literally, they just keep the pedal to the metal. It's like, you would think with this type of growth this company has, they would sit back and chill a little bit. No, she keeps the pedal to the metal. They keep coming out with new products, new SKUs, new product categories of getting into refrigerated goods they want to get into in 22, snack products, nutritional bars, all these sorts of things. It's just she's relentless. I think the whole team's relentless, and you don't bet against relentless management teams, flat out. That's one of the worst things you could ever do in the stock market, and that's why it cracks me up. The short sellers trying to bet against this one. They're the most relentless management team I've seen, and believe me, I know I've been invested in a whole lot of companies that have relentless management teams, and I haven't seen one like this before. That's moving this fast, and that's why I have full faith that this is going to become a food giant over the next several years. And it won't be like, oh, Tattoo Chef is some niche company that's doing $300 million a year in revenue. They'll be doing multi-billion dollars, and everybody will be like, oh, Tattoo Chef's a beast, man. I remember back in the day when they had 2 or 4 products in these stores, and now they got 20, 30, 40, 50 different products in these stores. So that's where they're going. I have full faith that they're getting there, and the sell-throughs are absolutely insane. Target said, the frozen food launch they had in Target this year was pretty much the best selling they've ever had. So, just kind of speaks volumes to kind of what's going on there. So, yeah, Tattoo Chef, no question, this is one of those stocks, okay? Now, next one up here, what if I told you there was an industry? This industry is still federally illegal, right? $85 billion minimum industry per year just in the United States of America alone, right? And the company, I think, is poised to thrive massively in this market. There's going to be several companies. There's going to be probably 10 companies that thrive massively in this market over time, but one of them being the Planet, okay? Planet 13. So this is a stock that's $3.48, all right? So when it comes to the Planet, there's a company that, I don't even know where to start with this one. They have these massive superstores that's like nothing you've ever seen before. Go to the Las Vegas store, go to the Orange County store, experience these stores if you ever get a chance to, and you're going to be like, oh, this is different. This is like nothing I've ever seen at any point in my life, okay? I mean, we're talking about these superstores are just an experience. They're like cool to go to, even if you're not even into using the product, essentially, okay? The market cap's fallen quite a bit now, $687 million market cap. I think this is one of those companies that there's going to be many companies in this industry that become tens of billions of dollars of market cap, and even some that become, $100 billion plus market caps over the next 10 years. I think the Planet is going to become one of those companies that is at least a $10 billion plus company over the next 10 years. And remember, the whole illegal market is going on to the legal market over the next 15 years. So it's not going to happen overnight, but just slowly but surely, the illegal market's going to become smaller and smaller and smaller, and the legal market's going to become bigger and bigger and bigger. And in 15 years, it will be almost unthought of to buy this product illegally, essentially, okay? And never mind that. Imagine how many folks are going to, try the product out now that it's legal. Because remember, a lot of folks don't even want to. It's too difficult to go through the legal market, or they don't want to do that, right? They think it's wrong. So at the end of the day, like the TAM for this market is going to increase exponentially. And never mind that, you have this massive pent-up demand that is all going to move on to the legal market over the next 5, 10, 15 years, okay? So a company like Planet is poised to thrive in a massive, massive way. Already expect to be profitable in 22. This is huge because look at the revenue growth expected for this company, 54% revenue growth. So, if they can just eke out any profit for this company in 22, that's a miracle. Because I can tell you there aren't many companies growing 50% plus revenues that are able to be profitable. Not very many. That's an extremely hard thing to do, okay? It's one thing if you got a business model where your revenue is growing 5% and you're profitable. It's a whole nother when you're expected to grow 54% revenues, which could be a lowball number, by the way. 54% revenue growth there in 19 cents of EPS, that's a miracle, okay? That's all I'll say about that. So we'll see what happens there, but any sort of profit would be a W for Planet in a massive way, okay? So when I started buying this stock, right, they had one superstore in Las Vegas, and that's all they had, right? Now this company in 22 is expected to have 4 to 6 stores. They should have their Chicago store open at some point in 22. They should have at least one, if not several, Florida stores open. They have the massive Orange County superstore open. They have the Vegas superstore open, and then they have the smaller format Vegas store open, Medizin as well, okay? So yeah, one store when I first started buying in the stock, which was, oh gosh, it was either late 2019 or early 2020 when I first started buying the stock. They had one superstore. Now they're going to have 4 to 6 stores in 22. Their owned brands were just starting out, and now if you look at the market share that their owned brands has, it's off the charts. Owned brands mean they actually have like Haha Gummies, Dreamland Chocolates, and many other brands essentially that are building into, you know, think about like the liquor space, right? And there's certain brands that are huge brands that are very well known. You know, think about like Jack Daniels or Jim Beam or you know, different huge tequila brands, right? Like 1800 or whatever, right? And those brands are massive. And what the plan it has is they're building into those sorts of brands that are going to be well known around the United States and even potentially the world that will have massive market share in different markets, you know, throughout the United States. And so that's phenomenal. Number 3, this company had $5 to $15 million of cash when I was first buying the stock. Now they have $70 million plus of cash on their balance sheet. They had no curbside pickup or delivery when I first started buying the stock. Now they have both delivery and curbside pickup. And when I first started buying the stock, it was a company that was just completely relying on Vegas because they had their one store open, right? In 2022, that's just not the case. Like I said, they should likely have a Chicago store open and probably several Florida stores open as well. Plus, they have the Orange County store that they opened here just a few months ago, right? Which is in California. And then, you know, obviously 2 stores in Vegas. So now it's not just a relying company. So yeah, the plan is one of those stocks I look at, and it's just been a beaten down dog. And the opportunity there for somebody like myself that has a multi-year outlook is off the charts. And that's one of those stocks that, you know, I think we're going to look at in the future and be like, oh yeah, remember when the Planet was like a $3 stock? Yeah. Okay. And then it's like a $30+ stock, and people are like, oh, that's going to be high. And then they watch it go to $100 and like, oh yeah. So anyways, that's going to be a fun one. Next one up here, this one's an obvious one. Then we're going to get into all the stocks that are going to be probably buys for me during the month. Corsair Gaming, CRSR. Yeah, you're not going to see this stock at $21, $22 and me just sit on the sidelines. I had to highlight this comment because it was hilarious. It says, hello guys, I'm new to investing. Can you tell me what it means when the stock is green? This is my first time seeing this. Very weird. Thanks. Okay. 2 thumbs up for that comment. That is absolutely amazing. All right. I mean, in all seriousness, Corsair has just been a devastated stock. Their stock price has just gotten destroyed for no good reason. The company's putting up good numbers. The company's innovating at a rapid pace. They're in the 2 massive growth industries, gaming hardware, streaming hardware, plus other adjacent industries. And so this is one of those companies that's poised to thrive for years to go in the future and is an established, extremely profitable business model. It's just the stock price is just a devastated stock. You know, it's trying to find its long-term shareholder base. It's been the Eagle Tree Fund thing it had to work through, right? And then short seller situation, it's had to go through a lot as far as the stock price goes, but the fundamentals of the company is very exciting. Company's trading right around a $2 billion market cap now and around an 18 PE ratio. A little ridiculous, okay? That's all I'm going to say about that. So this company is expected to do $1.59 of EPS in 22, which puts the forward PE at just way too low for a company like Corsair Gaming. Also, this company is expected to do $2 billion of revenue, which at a $2 billion market cap, this essentially puts this company at a forward price to sales ratio of 1. For Corsair Gaming, this is a growth company. I mean, next year is supposed to be a fall-off year for them, and they're still expected to put up 6.5% revenue growth. Never mind what this company does in a hot gaming market, right? All it takes is one big game to come out, and the next thing you know, Corsair all of a sudden has 20, 30, 40% revenue growth. Like in a snap of fingers, it changes quick for this company. So think about that. Expect to be a horrible year for Corsair, and they're still expected to put up 6.5% growth next year, okay? How many companies can really say that if they have a horrible year, they still grow the company, okay? And expected to have EPS go up substantially, which if this inflation calms down a little bit and a lot of the cost of containers and shipping and all those things come down, Corsair's profits can go through the roof, okay? And so, yeah, the valuation's gotten just ridiculous on the stock. The stock price has just been hammered. It's my worst stock I've ever held in terms of how much I'm down in it. I've never been down $180,000 on a stock. This is that one stock. So, yeah, I wish I'd waited longer to buy this one, but at the end of the day, I thought this one was a deal when I first started buying it. I think it's just a way better deal now, okay? And so, don't feel bad for me that I'm down 180,000, because there will be a day not too long from now when I'm up 180,000 on this, and then I'm up $500,000 on this, and then I'm up $1 million plus on this. It's just a matter of time. So I'm willing to wait. I'm a long-term investor, and if I got to wait 1, 2, 3 years, that's perfectly fine. I'll take my gains when I get my gains, okay? So yeah, Corsair Gaming, absolutely another one of those stocks. So let's talk about all the probably buys I'm going to probably buy during this month, okay? First one up here is actually Beyond Meat. My battery's running low, but don't worry. I'll make it through, okay? Beyond Meat, a company that I haven't been the most thrilled with the innovation. However, there's no doubt they're a big player in this market. They're going to get a lot bigger in the plant-based food space. Partnering with so many different restaurant chains out there, it's amazing. And there's a company that just continues to build their business bigger and bigger and bigger over time. They've been a very disappointing company over the past year or so. I think that will change for this company in 22 and moving forward. I do think their growth is going to be limited because Impossible Foods is such a serious competitive threat in this market that I think Beyond Meat's going to have to take that very, very serious. However, if this stock falls to anything, with a 5 in front of it, which is definitely possible because this could be a lot more tax loss harvesting coming in Beyond Meat, this could be a stock I pick up. So if this falls to $58 a share, $55 a share, as a long-term investor, I'll pick up Beyond Meat. Like I said, I'm not the most impressed with their innovation they've had for the last 12 to 18 months. However, there's no doubt this company's going to grow much, much larger over the coming years, okay? So Beyond Meat's absolutely one I'm going to consider definitely buying in the month of December if it continues to fall and more tax loss harvesting comes in that one, okay? Honest Company, this is one I've started buying over the last couple months. I'm going to continue to buy this one very heavily. I want to build out my position as big as possible by the end of this year, essentially. Good growth company, big in the diaper industry, wipes industry, cleaning products, soaps, shampoos, things like that. And I think they're going to grow much bigger in future years. They're partnering with all the right companies. And their two main customers seem to be Target and Costco. Also got a good business on Amazon as well. And I think it's one of those companies that will be in all retailers in the future and get SKU expansion as well, okay? And they're taking market share in their products they compete in if you look at the market share data, okay? So it's just good news all around. I think this company's likely to make a nice profit in 23 and moving forward. I think there's definitely a possibility next year they take a slight loss or very, very close to break even. But I think 23 and forward, they'll be a profitable company that will still be a nice growth company. So Honest is one I love. I also think it's an acquisition candidate. I think there's a lot of bigger brands that would love to buy out a company like Honest. I hope they don't, because I think this one has too much long-term upside. This is one of those stocks I think is going to be a $20, $30 stock a few years from now. So I'm hoping they don't get bought. However, that is certainly a possibility, and it would create a bunch of short-term money to be made there, okay? Oatly. So this is one that if this one falls to the 7s, and especially if it falls below 7, I could end up picking up Oatly. Tried a lot of their products recently. I'm a fan. And I will say this is one of those that, it's one of the 4 horsemen of the plant-based food space over the next several years. And I think they're in a great position. I think the stock price can continue to be damaged for the next, probably 6 months plus. And now they have to deal with tax loss harvesting as well. And they're trying to still find a long-term shareholder base here. Plus they have lockup expirations. It's kind of a messy situation. So Oatly's one of those that if this is one could easily keep falling to the 7s or below. And if it does, I'm going to likely pick up shares and just be, if I think about it like this, right? And by the way, I'm a little more interested in Oatly than I am Beyond Meat, especially if Oatly falls more substantially. So if I hold Oatly, that's kind of like the dairy-based play, right? And I had Beyond, and then I had Tattoo Chef, which is kind of the let's call it the frozen food play, plus a refrigerated food play, plus a snack play. That could get really, really interesting because I'll kind of have the best of both worlds. So I'm really, really hoping this one falls more. If it does, I'll likely be a buyer of the Oatly. All right, next one up here of this bunch is JWN. Nordstrom's fallen a lot lately. And I love Nordstrom. They got a phenomenal department store business, which it basically sells to the more of, let's call it the top 10% of income earners. They have the Nordstrom Rack business, which is amazing. They've done a good job building out the digital side of the business. The stock has just been devastated. And this is one of those that I think is going to build into a dividend beast once again, probably in 22 and moving forward. So I started picking up some more shares of Nordstrom recently. I'll probably pick up some more if it continues to fall, especially if it falls to like $17 a share. Palantir, $17 a share as well. I really like Palantir for the long term. I think it definitely is kind of going through a moment. The only thing I don't like about Palantir is how hard the management team tries to sell this stock. I mean, I was even watching my own channel back the other day, and they were running ads, basically of the CEO talking on CNBC recently. And so I don't like, and even on the conference call, they talk like they're trying too hard. So I wish they wouldn't try so hard, because it kind of almost creeps you out a little bit as an investor. It's like, why are they trying so hard to as a management team sell me on the stock? So I like Palantir. I think it has a beautiful future. I just don't like how the management team and the company seems to be trying to sell the stock so hard. Okay, so. But at the end of the day, if this falls to 17 something, I'm going to pick up shares there. Palantir, I think it'd be a good diversification for my portfolios, because I don't own, really any companies that compete in that space, which is kind of at the intersection of data and artificial intelligence. SAM, innovative drink company, obviously in the alcohol space, and I think this one just continues to grow in future years. I think right now they're going through a tough time, because basically hard seltzer just fell off a cliff, and they get a lot of their business from hard seltzer. It's been a huge growth category for the Truly. So I think that will be a solid growth, but I think there's just a lot of opportunity for SAM to grow outside of that. And the stock's fallen from $1,300 to $400. So under $450 is what's really intriguing for me in SAM. I'm hoping it goes to 300 something, because that would be where the stock was prior to Roni Rona. So that's my hope there, and it's definitely a possibility. Okay, T-Doc. Yeah, I mean, this is just, if you're thinking about a healthcare play, which I'm not in any healthcare plays, there's nothing more exciting than Teladoc for a long-term basis and where this company can be. Obviously, Kathy Wood, it's usually her second or third biggest position in the ARK fund. And yeah, I mean, not a company that's going to be profitable anytime soon, but when they do get profitable, it should be, a profit beast. I'll just put it like that. Lemonade, this one needs to fall a lot more for me to buy, but it's certainly possible it could. If this ever hit like a 25 or something, I would buy. It's just the problem with Lemonade is, man, they have a lot of years of losses kind of ahead of that company. Not very good food company. Although that one could be intriguing. I'm just waiting for the management team to give more clarity on that. Voyager Digital, love Voyager Digital. Crypto brokerage, plus now they got a debit card product. High probability to get into stock brokerage game in the next couple of years, and launch other products that are just kind of overall fintech company. So really, really like Voyager. That's one I absolutely love holding, and I'll likely be a buyer if this one falls below 14 or below. So hope you guys enjoyed this video. This was a beast. There's a lot of stocks to go over. There's just a lot of stocks that are deals right now. And if there's a lot of stocks that are a deal, it's going to be a bigger, longer video. So hope you guys enjoyed this. Make sure to subscribe to the channel. Download the Hungry Ball in your iOS and Android store now. That's so you can track stocks, do research, keep up with news, keep up with what's going on in the markets, listen to earnings calls right inside the app, read SEC reports right inside the app. Much love as always, and have a great day.